Hello, gorgeous. Happy New Year. I'm coming to you today to give you just a quick update about some tax law changes that are going into effect in 2025. This is not a comprehensive list, and something that I want you to keep in mind is that every single year, the IRS updates a whole bunch of eligibility charts and income tables and thresholds for things like for basically anything in tax law that is tied to inflation, right? So in general, for example, your retirement accounts have a different threshold every single year that is the maximum contribution allowance that you can put in for the year. So all of those amounts have gone up, and rather than give you, a laundry list type episode with every single income tax table, which would put you to sleep, I just want to say all of those have changed because it's a new year and this happens every single year. So whenever you're curious about what the new 2025 rate is or contribution allowance for a certain thing, that's just a thing you should know that you can Google very easily, but they do change every year. One thing I do want to bring up that you could look up, but I will save you the work, is the mileage rate. So a very important thing, if you are someone who owns your own business, if you work for yourself, your business mileage is deductible, and the mileage rate is very generous in the US. So in 2025, the mileage rate has gone up to 70 cents per mile, meaning that if you take a business trip, let's say I go to give a tax lecture in Charlotte, and let's say that's 100 miles. I'm actually not sure how many miles it is for me, but this is something I'm really doing in a couple of months, and I also did a couple months ago. So let's say it's a 100-mile business trip. At 70 cents a mile, that means that $70 is the amount of deduction that I get for that trip. So it's very generous and very worth your while to track your mileage. And two little quick beginning of the year tips that I want to give to you when it comes to getting every dollar you can out of your mileage is, one, today is the day you want to capture your odometer, right? Record your odometer at the first of the month. This is because one of the mileage rules is that you are not allowed to take every single mile you drive, only the business miles. And part of how you prove that is you have to actually say what your total mileage was for the year. But all you need is a simple habit to do that. The simple habit is around January 1st, every single year, you just record your odometer. This gives you a beginning mileage for this year and also an ending mileage for last year. So you know what the total miles were that you drove. Now, how do you find out what the business mileage is? Well, the second tip that I want to give you is to download a mileage tracking app. All right. In the days of apps, tracking mileage is not nearly the pain in the butt that it was before apps existed. One that I like is Mile IQ. And I believe I have a discount code if you use the code HCOL24. Shoot, is it HCOL124? I'm not sure. I think that gives you 20% off their rate if you get the pro mode. I do use my IQ myself. I really like it. So just FYI, that's an affiliate link or an affiliate code, but I like my IQ. I think it works. I think it's good. I'm agnostic about which one you actually pick. Pick another one if it suits you better. That's fine with me. So the mileage rate is up to 70 cents a mile in 2025 versus 67 cents a mile in 2024. And the other thing that I find a little bit confusing, or that can confuse people when you're listening to an episode like this, 2024 has just ended, 2025 is beginning, which is the number I'm supposed to be paying attention to as I do my taxes that are due this April. Well, taxes are retroactive. So keep in mind that when you're doing your taxes that are due April 15th, you're looking at 2024 numbers for that because we are doing the taxes for 2024. What I'm telling you about now, this increased mileage rate, it's great, but it is the one for 2025 that, starting with the business miles that you drive starting today. Okay, so that's how that works. Okay, For the rest of the rates that go up every single year, I'm going to let you look those up on your own, but I will just remind you that they change every year, so you might want to update your files. A couple little things to mention also. One, the Secure 2.0 Act, which was a law that President Biden and Congress passed, I believe in 2022. The Secure 2.0 Act was a really nice piece of legislation that gave a lot more allowance and leeway to taxpayers to help you put more into your retirement accounts, and also have a bigger list of emergency reasons that you could withdraw that money. These things are really important because what's the number one thing that holds people back from putting money into their retirement accounts? Well, it turns out the research shows it's people's fear that they might need that money in an emergency. So in other words, a lot of taxpayers have not been taking full advantage of these amazing accounts, which give you a huge tax benefit because they're scared they might need the money. So what did we do with the Secure 2.0 Act? That act, it gives you all these allowable reasons that if this happens to you or this happens to you, you're allowed to take out that money without penalty. This way you can go ahead, max out all your retirement accounts and have that peace of mind knowing that you're going to have the ability to take, $1,000 out per year for any emergency, self-reported emergency reason. Or for example, for self-declared domestic abuse situation. And this is really nice. This is a huge improvement because if you have had experience with anyone in your life who has suffered from domestic abuse, asking for a police report is really asking for a lot. Most survivors do not go to the police, and so that is really a barrier that is too high for most people to meet. So the self-reporting piece, that's really helpful. Anyway, the Secure 2.0 Act is a great piece of legislation. I really think it's fantastic and does a lot of good. And I like to point out when government can do good, because I think that's the whole reason I do this work. Our government has the power to do good work when we hold it accountable and elect people who represent us well. So one of the provisions in the Secure 2.0 Act is that, of course, we know that a lot of people haven't put enough money into their retirement accounts, maybe facing some financial insecurity as they approach older age. So the Secure 2.0 Act allows a higher super catch-up contribution. Now, it's limited. Normally, if you're over age 50, you get special catch-up contribution amounts that you're allowed to contribute to your retirement accounts. For IRAs, this is $1,000 for a Roth or a traditional IRA. And for a 401k, 403b, solo 401k, if you're over 50, in 2025, your catch-up contribution amount is $7,500 in addition to the $23,500 limit that everybody has. Okay, so that's a lot of money you can put in. Now, the super catch-up group says that if you are a taxpayer aged 60, 61, 62, or 63, so ages 60 to 63, yes, that is just a small group of people. But if you're in that age group, then you are allowed to super catch up and put a contribution of $11,250 extra dollars cumulative across all of your retirement accounts into a 401k, 403b, solo 401k, etc. So it's an interesting little wrinkle. If you happen to be in your early 60s, take advantage. Okay, so for 2024, the tax year that you are about to report your income for, you can now expect to receive a 1099-K from a Stripe, Square, PayPal, Venmo, if you got an amount over $5,000, okay? That's for 2024. This threshold is going to be coming down, down, down. So in 2025, starting this year, this threshold drops by half to $2,500. And then finally in 2026, it will match the 1099 NEC amount, which is a threshold of $600. So at that point in 2026, finally, we'll be able to say all 1099s get reported to you if you earned over $600. Okay. But we're phasing that in slowly. So 2024, the 1099Ks you'll be receiving in the mail in this coming month hopefully, you'll be getting them if you earned anything over $5,000. All right. Keep in mind, though, that a lot of states tighten their rules before the IRS tighten the rules. So there is a list that you can Google and find online of states that have smaller reporting thresholds than the federal government. And so obviously, if you are someone who lives in one of those states, you're going to be getting 1099-Ks for income that you receive that are over your state reporting threshold because, you know, Stripe is going to be obligated to send that to you. So just be aware that the states can be a little different. Speaking of federal versus state income tax, another update is that the IRS Direct File program is now permanent. This is lovely. If you were listening to this podcast over the summer, you know that I did a 3-part series where I read a really wonderful piece of journalism from ProPublica about the scandalous treatment of the IRS free file program by the tax companies, right? The for-profit tax prep companies. I'll let you go back on your own and find those summer episodes, that 3-part series, to learn what that scandal is and how they tried to kill direct file. But the upshot is that IRS taxpayer-funded direct file free tax returns is now becoming a permanent feature, which is great. And last year was a pilot year. It started with only 13 states, and this year they're doubling it to 25 states. All right. So all 9 of the states without income tax plus 16 more. So I'll just read off the states that do have free direct filing through the IRS website of your tax return: Alaska, Arizona, California, Connecticut, Florida, Idaho, Kansas, Maine, Maryland, Massachusetts, Nevada, New Hampshire, New Jersey, New Mexico, New York, North Carolina, Oregon, Pennsylvania, South Dakota, Tennessee, Texas, Washington State, Wisconsin, and Wyoming. All right, so if you're in one of those states, you may be eligible to file a free federal and state tax return. However, if you're listening to this podcast, you probably have self-employment income, and I am sad to tell you that this program, as of now, is highly limited, though I would love for us all to advocate for it to get expanded so we can all have the free tax preparation that I think we should be entitled to as taxpayers. It's not available to you if you have gig income or self-employment income or business income. So for most of you listening, this is not, you are not going to be eligible for the IRS Direct File program, but your mom, your sister, your brother may be eligible, and I want you to tell them about it. So it's a limited program right now, but it is expanding, and I want it to continue to expand. I think it's a good thing. All right. Those are the quick updates I have for you for as we head into tax year 2025, and as you begin your tax prep for tax year 2024. I want to let you know that if you are in my program, Money Bootcamp, you are guaranteed tax updates for 1 full year from the date that you join. It's one of the services that I provide to the people who are members of my Money Bootcamp program. And if you are interested in checking out Money Bootcamp, and it's going to be a really valuable service that you have this year, because we know that what is coming is the expiration of the Trump tax cuts of 2017 with the Tax Cuts and Jobs Act. So we know very likely in the first 100 days in office with a Republican Congress and legislature and Trump in office, we know probably in the first 100 days, there's going to be a lot of tax law changes coming. So now is a very good time to join Money Bootcamp. If you've ever thought you wanted to do it, now's a great time. It's a lifetime access program. So you can come to a free live class that I'm hosting on January 9th to learn the 4 mistakes that every self-employed person makes with their taxes, and also how to stash an extra $150,000 in your savings and make your taxes simpler. It's a really great class. It's really valuable. And I will also tell you about my program, and you can see if it feels like a good fit for you, and you can become eligible for my quarterly live sessions teaching you how to pay your quarterly taxes, the full program, and also this bonus of annual tax updates. So if you're interested in joining this free class, that's going to be an hour of really valuable teaching. That the class alone, even if you never join Money Bootcamp, the class is really valuable and will help you get started on your taxes. You can join that at go.sunlighttax.com/free. Once again, that's go.sunlighttax.com/free. I will see you in this free class. Space is limited and you need to register to be there, but it's free and it'll be really great. So I hope to see you in class. And for the rest of you, I hope these 2025 tax updates have been helpful, and I will see you in the next one. Bye.
Thank you for watching. If you like this video, be sure to like, leave a comment, and subscribe to my channel. I'm so grateful for that. This video is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.